Good afternoon. It is Monday, the 26th of January, 2009. This is Brian Shannon from alphatrends.net. The market's closed here. The NASDAQ finished with a gain of 21 cents. But we had a very volatile session once again here today. Early on, the market made it up to that $29.60 level. I had shown that on the blog earlier as well that as it was approaching there that you didn't want to get excited and make fresh purchases. And we can see here that $29.60 did in fact act as resistance once again. So, encouragingly, we came right down to that 5-day moving average, and the market bounced pretty strong from there as well. So, and in doing so, it had put in a higher low. So we've got a higher low in here, but you can see that when the market broke this support, it came down real hard. This is where we touched the 5-day moving average. We're looking at a 1-minute chart right now. And then it rallied back up to the declining VWAP and then basically closed right below it. On the daily time frame, you can see in here as well that the 50-day moving average right now is at $29.13. We closed at $29.11. So we're still closing below that 50-day moving average. We've closed below it about 8 or 9 sessions right now. And if it can somehow leap back above this $29.60 level, then that could pave the way for some further upside. Again, the encouraging things here are we're holding the 5-day moving average. We're seeing higher lows. We're getting more frequent tests of this resistance. And you could, it's not as obvious in here, but you could say in some of these markets, it looks like maybe we're building a right shoulder for an inverted head and shoulders pattern breakout. If that's the case, we could take the height of this pattern and come up with an approximate upside target near about 31.25. That puts us into this gap area, and also that's back up in this level. So you got to continue, I think, to day trade it until we have a better idea. The primary trend remains lower, but it seems as though we could be building for maybe a short squeeze here. I don't want to be too bullish. We did have 1,970 advancing stocks today and 1,082 decliners. So internally we had a good day, but that hasn't been the case lately. Just be prepared to go in either direction here and keep your trade shorter term. By the way, on the bonus tab to the technicalanalysisbook.com, I uploaded my trades for the day. I finished at 11 o'clock Colorado time and showed how I had made $981 with some day trades and the order book there. So go ahead and take a look if you have the username and password. Let's take a look now at oil. Oil we had seen on Friday had a great day as it, again, in a primary downtrend though here on the daily time frame. You got to always keep in mind that you can't get excited about these rallies when they come within the primary downtrend. But here, let's take a look at the 10-minute time frame. We had seen the 31 level clear on Friday, and doing so on some heavier volume. We had seen light volume on this little consolidation in here. This morning we had seen further upside, and then it basically completely failed. And you can see where it was holding the daily VWAP. Let me just resize that. I don't know what's going on with this. Hold on. Okay, there we go. We were holding the daily VWAP early morning. Then we started to see some lower highs in here, and then that support broke right here with the daily VWAP, and that's where the selling really got aggressive in here. So now on a 2-day, you can see it's holding the 2-day VWAP right at the average price of the last 2 days. Failure to hold in this area might lead this market to completely give up these gains. So don't be too excited about oil. Be sure to protect profits that you have in there. A pullback, you would hope to see this $31 level act as support. We do have that rising 5-day moving average potentially coming up to meet it. So oil remains in a primary downtrend. We're seeing a nice rally showing signs of weakening in here though, so be careful with it. The Russell 2000, I just changed my screen around so I can't find all my symbols, but the Russell 2000, the level we've been watching in here really is that $46 level I mentioned on Friday, and this $46 level we've gotten just underneath it today. Let's take a look at the 30-minute time frame. We can see that a little bit more clarity. This $46 level actually goes back to over here. This is where it really has its significance from these lows. So we came up to that once again. unable to push through it, but the market got rejected at that $46 level, came right down to the 5-day moving average like we saw in the NASDAQ, and now it seems as though it's trying to find some stability there. This is our most important level of support here in the intermediate term. That's at $43 level, but now today's low, this pullback low at 44, I think you want to keep a close eye on that tomorrow as well. If we can push up through 46 and then maybe even pull back and then get going, that would be ideal. Again, the market doesn't like to do what we want it to do, but that's a potential scenario to be aware of. On the daily time frame, we're still below the declining 50-day moving average in here as well. Perhaps it's getting back above 46 in that 50-day moving average that we could see a little bit of a short squeeze rally materialize from, and the people who sold short in here will become trapped. I'm only outlining a potential bullish scenario. I'm not bullish here because we are obviously still in a bear market, and you have to keep that in mind. So breaking back below this level, I think you could see this whole thing, test back down towards 43. I think the next test of 43 could be fatal to that level. So you've got to just keep a very balanced approach to this market. Look for the strongest stocks to be long, and look at some of the weaker stocks that look like they're poised for a breakdown to be the ones to be short, and then manage risk from there. Financials today, like I said, I switched my screen around. Here we go. We're down 16 cents, and they came up just beyond that $9.40 level briefly. We've still got a declining 5-day moving average. The market will need to stabilize in here if it's going to materialize into a rally that can hold for more than a couple days. But the daily time frame, we've still got this, the closing low from last year was at right in here at about $9.40. So the closing low from last year seems to be a level of resistance, $9.40, and we've seen that right in here where it was rejected in that area the last couple approaches. We've also got all these other potential levels of prior support, which could potentially act as resistance if this market gets going to the upside. You can also look at this though as building just a little consolidation in this downtrend, that we may break below this and continue lower again. So it's still a very dangerous sector to be trading from the long side. I did make money in there on the long side in this today with the leveraged ETF, but there's good rallies to take advantage of early on. I mean, just perfect low volume pullback to a rising VWAP, and then it exploded higher. From there, we saw that the VWAP acted as resistance. I had pointed out on the blog as well that breaking below $9.10 would probably see this rally collapse, which is what happened. I was looking for the potential of getting long above $9.25, or if it broke below $9.10, that it would break down. That's what we saw. We did see a nice recovery in here, again, from the 5-day moving average. So that 5-day moving average is being widely watched and acted upon, but it was unable to rally up to this prior support at $9.10 area and the declining VWAP. So still got to be very careful with these financial stocks. Finally, we'll look at the S&P 500. It was up 57 cents today, or 0.69%. This market can't get above its declining 10-day moving average. It's got a declining 20 and 50-day moving average as well. As I had mentioned on Friday, that the 84 level, 86 is the main area that we really want to see this market get back above. If it can get back above this $86 level, then perhaps we can see a rally that sustains and squeezes these shorts. One potential scenario for such a turnaround would be that we're seeing this pattern materialize, which if you look at, again, left shoulder here, this is the head, and here we're building potentially the right shoulder. If we're building the right shoulder, what we want to see happen is we want to see this level hold, $82.40. If it can hold above $82.40, then I think we're going to save another test of this 80.5 level for maybe another time. But we will have maybe trapped some shorts in here who are going to get nervous and see this inverted head and shoulders pattern. We're still in earnings season. There's going to be a lot of movement based on the individual stocks in reaction to those headlines. But if it can maybe pull back just a little bit further, scare some people, but hold above this 82.40. Then maybe it can push past that $86 level. At that point, what would our upside objective be? Well, we take the height of this pattern, add it to the breakout point at about 86. That gives us right up towards this area right in here. Basically, so where we've seen this prior support act as resistance right there at about 91.30. Again, I don't mean to be spending so much time on the bullish potential scenario here because we are still below that resistance. If we can get above it, then maybe we see this market continue higher. We're seeing, higher lows here short term, but breaking below that 82.40, I think you want to really be very careful with this market.